Hello, welcome to Heady Remarks. It's September 3rd, 2022, and I just wanted to talk about the financial system. Archie, he's like way up on the cabinet. He's coming down though. He's sliding down. It's on the fridge now. He might be stuck. It's hard for him to turn around because he's fat. He's on a diet though. Are you coming? He's like, she started talking, so I have to go over there. He assumes I'm talking to him. Makes sense. I mean, I would think that too if I was a cat. Oh no, he's just gonna sit up there. Okay. All right, so I don't know if I just want to go through. I just tried to learn everything about the entire history of banking. And hello, Tribal Defender. Welcome. Yeah, he's on the fridge. Okay, he's coming down. There he is. Come sit next to me. Come here. Where'd you go? You under me? This is like shark jaws. Come up here, Archie. Come on. There you go. He's here now. Okay, so books I had already read The Creature from Jekyll Island by G. Edward Griffin. Stop it. Don't. And another one, I listened to the audiobooks. The Lords of Easy Money by Christopher Leonard. And that one's interesting because, The Creatures from Jekyll Island is written by I guess you'd think of him as like a financial fundamentalist. You know, he thinks that we shouldn't even be doing fractional reserve banking. We should have full reserves for all the money in the bank. And stop. A lot of people think you're like old-fashioned if you think that way. I don't know what I really think about that yet, I guess. But I kind of tend to be like, okay, let's just do that because, you know, they think that the money, when it's just sitting in the bank, full reserves just sitting there doing nothing, you can't use it to improve your community or whatever. You know, they use excuses like that. I was watching this guy just now. It's like Professor Barth. He was showing a scene from It's a Wonderful Life. It was when, you know, during the Great Depression, the main character works at a bank and they're like doing a bank run and he's like, well, your money's not here. It's in your neighbor's house who's built in the middle of building. You don't want to foreclose on him, do you? Trying to like get your own money back from the bank. I don't know. It was weird. I haven't seen that movie in a long time. He was about to kill himself at the beginning. I just remember that. And then suddenly he's all like defending the banking system, apparently. Maybe I should rewatch it. Okay, so Alan Greenspan. Before him, it was Paul Volcker? Hold on. I'm talking about who ran the Federal Reserve, the chairman, the head, Paul Volcker with the CK. Okay, Paul Volcker. So, yeah, from 1979 to 87. I believe we had some crazy inflation in the 70s. But then Alan Greenspan took over, and after him came Ben Bernanke, and then Janet Yellen, who I believe now is the Treasury Secretary, or the Secretary of the Treasury, whatever you call it. So currently, the leader is Jerome Powell, and he's increasing the interest rate right now. That's what they're doing right now. And I guess it's supposed to hopefully fight inflation. And they're calling it quantitative tightening. So they're reducing the money supply. It's kind of weird they even have that much power. Quantitative easing is when they're basically just printing money. But they do it in a weird way. Okay, so I'm just looking at the notes that I copy-pasted onto this sheet so that I would have it all in one place. So these are a little weirder. It's like when I'm driving or like whatever, I'm in the middle of something, I'm away from the sheet. So I like put it on my phone notes instead. However, I figured out how to do it on the same document on both my phone and the thing. But that was later. So anyway, What am I babbling about? Worried about ending up like Japan. So Japan had a thing. I guess that was in the 90s. Barney Frank is an idiot. Charles Lindbergh Sr., our fair-haired boy himself's father, was, I heard some good quotes from him. Panic of 1907 leads to Federal Reserve Act written by, I probably meant bankers. I put banners. Written by bankers, not lawmakers. Marginal loans in the 20s. I know I'm all over the place right now. Bernard Baruch and J.D. Rockefeller exit the market before the crash. Louis McFadden. Poisoned at a banquet? Wiki says coronary thrombosis. Wikipedia. Okay, don't forget the federal income tax, also enacted around the same time. So, sorry. The Federal Reserve was created in 1913 as a reaction to the Panic of 1907. Which was basically caused by JP Morgan himself. A lot of the banks that were that made the risky choices or whatever were his banks. And then he's the one who got like his pals together to form the Federal Reserve. So that right there is kind of like not great. And then I guess right around the same time, this is maybe a different topic, but I keep hearing that the federal income tax amendment that was that 1917, that it unconstitutional because it's unapportioned and wasn't ratified by the sufficient number of states. So that's weird. There's some lady, Ashley Jackson. She said she hasn't paid income taxes since 1999. That's kind of unrelated, I guess, but kind of similar in a way because they're just like kind of robbing us is what it feels like, squeezing us like a lemon. When they're trying to avoid crashes, I keep getting the impression that they're just trying to almost just avoid them so that we don't notice what they're doing. Like that, so that the crash will be a slow. The guy who wrote The Lords of Easy Money, the guy who wrote that said that, I think there's a chapter called The Long Crash or something like that, or The Slow Crash. What? Don't start playing. The subtitle to Lords of Easy Money is How the Federal Reserve Broke the American Economy. So that book like focuses just like on the quantitative easing, which is basically money printing that took place. It's like 300 years worth of money creation, more than we've ever done before in the entire history of our country, I guess, or ever since the history of banking, maybe he means. I gotta get away from those notes. They're just like random words. William Jennings Bryan, Secretary of State under, Woodrow Wilson was the president when the Federal Reserve became a thing. War is very lucrative. So this must have been when I was listening to that book, but Gulf of Tonkin, Federal Open Market Committee, FOMC, Colonel Edward House. Fed, the Bank of England, and the European Central Bank. The Fed aims for an inflation rate of 2%. We're way above that. The federal funds rate is what they raise or lower to control inflation. The interest rate on money borrowed between banks. Damn it, I don't even know where to begin. Okay, I'm just gonna Hank Paulson. Oh God, what am I even doing? Chairman Bernanke's college lecture series, The Federal Reserve and the Financial Crisis, Part 1. I don't even know where to go from here. So he did a lecture series. So Ben Bernanke, the one who took over after Alan Greenspan, he studied the Great Depression. Like that was his whole lifelong study that I'm drinking 7-Up. I don't even know where to begin right now. I'm like all over the place. Should I go back to the very beginning of banking or what? Like these notes are horrible. And I was doing this for 3 weeks, just like watching videos, listening to audiobooks, like so like under the Great Depression, Hoover's Secretary of the Treasury, whose name was Andrew Mellon, and I guess if you act like him now, people call you a Melonist. He was seen as being cruel. Like they worsened the Great Depression. But this is the thing, is I think that the Great Depression, it's just kind of weird that they create the Federal Reserve in 1913 and then 1929, the Great Depression. It's like, okay, you're not really doing your job. Maybe we should look up what the point of the Federal Reserve is. What is the purpose of the Federal Reserve? One I remember, they always say it's the lender of last resort. This is straight from the Federal Reserve website. What is the purpose of the Federal Reserve System? Often referred to as the Federal Reserve or simply the Fed, is the central bank of the United States. It was created by the Congress to provide the nation with a safer, more flexible, and hi Shane, sorry, did I just ignore you? I'm so sorry. I'm like, I don't know what's going on. A safer, more flexible, and more stable monetary and financial system. The Federal Reserve was created on December 23rd, 1913, when President Woodrow Wilson signed the Federal Reserve Act into law. I don't think he's happy about. He had some quote that was like, "I'm a very unhappy man. I've like destroyed my country." Basically, I don't know. I'll have to pull that up. Today, the Federal Reserve's responsibilities fall into 4 general areas: conducting the nation's monetary policy by influencing money and credit conditions in the economy in pursuit of full employment and stable prices. So, okay. Supervising and regulating banks and other important financial institutions to ensure the safety and soundness of the nation's banking and financial system and to protect the credit rights of consumers. I think that's one of their newer things. Maintaining the stability of the financial system and containing systemic risk that may arise in financial markets. Providing certain financial services to the U.S. government, U.S. financial institutions, and foreign official institutions, and playing a major role in operating and overseeing the nation's payment systems. Well, the guy who wrote the Creature from Jekyll Island, he says they've failed in like every single one. I do recommend that book a lot. It's just so much information. And the way that it's connected with wars, it's like, you know, kind of like that cute thing. So from that movie, that guy's like talking about how they were able to benefit the neighborhood by not just keeping full reserves. So like we were able to give your neighbor a loan and blah, blah, blah. But the problem is it might actually be getting used like kind of for war. It encourages war. And I pulled up the website there's like this 3-hour documentary called The Money Masters. And I like that. It's a good one. But I pulled up their website. Maybe they can help me like figure out my goal was to try to get so that I could explain how we're being fucked every day of our lives to big normie, to your average normal person. I don't know if I'm going to succeed in that, but maybe we should go to this video I was watching. It was, hold on. Ron Paul is like one of the few people who actually have talked about it. He's getting old. I was watching this. Money Masters was my first red pill in high school. Yeah, it's really good. It even goes into like that. I think a lot of people fall into the trap of like being into gold. And I guess that Fort Knox, they might have sold, like, we've tried to audit Fort Knox for a long time now, and they like won't do it. And they might not actually have our money there. They might have sold it to foreign countries or something. I don't really fully understand it, but I just thought this was also a little interesting video with Thomas Sowell. He's talking about Barney Frank George W. Bush and Alan Greenspan. So Alan Greenspan dipped out right before what's called now, I realize, the Great Depression. He dipped out. And yeah, it was convenient for him, I guess. And then he's like speaking at Congress about how he's a changed man. His worldview was wrong. And I'm like, oh yeah, it's like after the robber like absconds with the loot, and then he apologizes later and he's like, I was wrong. I don't know. I'm just like, yeah, it's easy to be like, oh, my whole worldview. He claimed to be all into Ayn Rand, but I don't even know if I believe him. There's like this whole false premise going on a lot of the time. I'm like, I don't think the argument is between free market versus regulation, like government regulation. I don't know. I just feel like they're trying to frame the argument in terms of like something that isn't actually what it is. So people get sort of stuck in that loop of like arguing over whether leaving the market alone is better or not. And it's weird because I'm like, okay, but you're like the chairman of the Federal Reserve. So if you're like so into the free market, why do you have a job that's literally just manipulating money and manipulating the market, the stock, you know? Like, why would you even want that job? All they do is like, what do they call it? Accommodate. They have accommodations and they intervene. Like Ben Bernanke, he wrote a memoir called The Courage to Act, because he thinks he's a hero, I guess, for like all that money he printed. Yeah, the courage. Okay, anyway, I hope you can hear this.
Forward TV. The world is thinking.
Can you hear it?
Let's consider a few of the public officials involved here. Congressman Barney Frank of Massachusetts speaking in 2003, quote, I would like to get Fannie and Freddie more deeply into helping low-income housing.
Yes.
I want to roll the dice a little bit more in this situation towards subsidized housing, close quote. What was Congressman Frank thinking?
He was thinking of getting reelected, because when you do favors of people, those people are more likely to contribute to your campaigns. They're more likely to vote for you if they're in your district. And so all of this.
I also remember George W. Bush telling people to buy homes right before. It seems like it's on purpose, and then they claim like they don't know what's going on, and then they'll admit to being, oh, I was wrong. They'll admit to it. I was wrong. This is so sad, darn it. And I'm like, you fucking did that on purpose. And I know you benefited somehow. None ya business. They are always reactive so as to not be blamed. Be not fooled. Their designs are always for private profit. Yes.
Is perfectly understandable from the standpoint of Congressman Barney Frank. So is his more recent statement that he wants the Fannie Mae and Freddie Mac to lower their lending standards for condos now. In other words, lowering the standards for housing was such a big success, he's now going to move on to the condos. Presumably he'll eventually get to the apartments.
All right. The 43rd president of the United States, George W. Bush.
That's funny. It says Hoover in the corner. Damn it. Hoover. Mellon was his guy. Tightened the money supply. He said it was like a bitter pill. You just have to swallow it. It's going to hurt. And people say that was the wrong choice, but I don't know what to say about that.
You write, quote, President George W. Bush joined the push for more home ownership, close quote.
Yes.
How come?
You'll have to ask him that. I know of no rational explanation. But his point was that he wanted more people to be able to own homes. This is the magic thing about politics. You set one goal and you don't worry about the repercussions. It's like Admiral Farragut saying, full steam ahead, damn the torpedoes. Right. And of course the torpedoes got us.
Wait, what are you talking about? Is he talking about the Lusitania? Because that was set on purpose into those waters to start World War I. That's the thing, is this really starts like back then, this banking thing. I mean, it's like a new world order. I shouldn't have said that, but whatever. That's when they got their hand, like the way they're able to turn this much money into way more money. Like there's something out, like wizardry, probably morally wrong. I don't know. I'm babbling.
But he wanted the federal government, particularly the Federal Housing Administration, to make loans so that people could buy a house without a down payment. He thought a down payment was just one of those fussy things that the market.
Hold on, that reminds me. I just saw an article that sent up a red flag. Aside from the weird racial aspect of it, Bank of America announces zero down payment. This is like from the other day. Zero closing cost mortgages for first-time home buyers in Black and Hispanic communities nationwide. I would not, if I were Black or Hispanic, I would not see that as like, oh, I'm so delighted. I would see that as like, I'm being preyed on. I watched that movie, The Big Short, and at the end they said that a lot of immigrants suffered because of the shitty mortgages that they gave out. Fuck the Fed. They own energy via money supply and cost of said money via interest rates. Yes, the hidden tax, the hidden hands, hidden tax. And then when I was reading this woman's book, she worked at the Dallas Fed under Richard Fisher, and she seemed to really respect him and like him and stuff. I guess she was in it for like 9 years. Where's her book? Hold on. It's called Fed Up! By Daniel DiMartino Booth. She's Italian. The subtitle of that book, Fed Up, An Insider's Take on Why the Federal Reserve is Bad for America. So, yeah. I'm not sure what my point was, but I just thought I'd share that. Ships and the Fed? Sounds like the Titanic. Yeah, Titanic. I do think they let that thing sink on purpose, not to get sidetracked, but I got stuck on that particular like conspiracy theory. I got stuck in being able to like think that what people suspect might have happened actually did. The point I got stuck at was the body of the ship has like a flat spot that at the bottom of the ocean you can see, like it doesn't support the idea that it was switched with the other one. I don't know. I probably shouldn't. I know a lot of people are very passionate about that one, but there's definitely more to that story than what we think, but I don't know if the ships were actually switched or not. Anyway, they're doing this for Black and Hispanic people. Totally to take out Guggenheim and J.J. Astor, who opposed the formation of the Fed. Yeah, I mean, it's perfect. It's a perfect setup for all that. But, I mean, maybe we could talk about it another time or I'll get totally derailed. But, yeah, like when it was one thing I was watching of this guy looking at the blueprints, and he was like, this can't be that ship. It's just not that ship because of the body of the, it's like looking at the blueprints. But, you know, I do think they wanted those people dead. So maybe I just disagree on how it came to pass. Like, I know there was a ship nearby that didn't come help that easily could have. I guess I think that it did just actually hit an earthquake, an iceberg. And then, you know, they wanted them dead. And yes, they are dead. So, I mean, because it was owned by JP Morgan, right? The White Star Line. Probably shouldn't have gotten on that boat. Which reminds me of the Lusitania, when Germany tried to warn people like, we are at war with Britain right now, so by the way, you probably don't want to get on that boat. And it got torpedoed by a German U-boat. They knew the U-boat was there. Churchill pulled its like assistance ship back, like recalled them back, so that the Lusitania wouldn't have their little protection, what is it called? Accompanying them? Sister ship, is that it? Okay, maybe that was, oh wait, no, you're talking about Titanic still. I believe it was switched with the Olympia. I mean, maybe I'm wrong. I would have to I just really got stuck on the whole blueprint part. But, I mean, JP Morgan, Anyway, they're offering, these seem kind of like ninja loans, which was a thing back in 08. So I don't know if you guys ever saw The Big Short, but like, oh, so you know how Christian Bale was playing, he's like playing that kind of Asperger's-y guy, Michael Burry, who he said that Michael Burry was talking about how his son has Asperger's, and he decided that he himself might have it because he was reading about it and how it takes him a lot of energy to make eye contact with someone. And I was like, I relate. And he's like, that's the one time you can almost be for sure I'm not listening to you, as if I'm looking at you. It's kind of funny. Anyway, he's predicting some interesting things right now. Again, he, I think on Twitter, he's called like Cassandra. What is he called? He deletes his tweets though, but he basically keeps talking about like hyperinflation and World War III, and Elon Musk was talking shit. He called him a broken clock, basically saying like he's right twice a day like a broken clock. But I don't know. I mean, he called it in 08. He was just a little early. His predictions, he'll say like it's happening a year. He'll say it's going to happen sometimes a year or two early. So he's just too early, and then it happens. I'll go into that a little more. I think he's an interesting character.
Market had come up with, you know, and we as so often happens.
He has a
being
glass
very
eye.
rough on him. This was at the compassionate part of compassionate conservatism. He was trying to make the conservative free market position more palatable for voters as a whole, and this was one of the ways in which he did so. Was it politically understandable?
It was political. Most disasters are politically understandable.
All right. Alan Greenspan, chairman of the Federal Reserve Bank from 1987 to 2006. You quote,
None ya business says hyper-stagflation, asset price crash, consumer goods and energy skyrocket. I mean, he was right before, and he calls himself Cassandra, like that lady. You know what happened to the people who didn't believe Cassandra? The Greeks got them.
him in the housing boom and bust as saying during a television interview, this is Alan Greenspan, quote, while I was aware a lot of these practices, this lending, were going on, I had no notion of how significant they had become until very late. I really didn't get it until very late in 2005 and 2006. Should Greenspan have gotten it a lot earlier?
A lot of other people got it a lot earlier. But on the other hand, I think as compared to members of Congress, he was way in advance. Because while he was warning Congress that there was problems down the road, especially with Fannie Mae and Freddie Mac, he was saying there's no immediate problem, but if this continues on to the end of the decade, which is where we're approaching right now, it's going to be a disaster.
Now, Barney Frank, George W. Bush, Alan Greenspan, of those three, who was the worst actor?
Oh, Barney Frank easily.
Okay, and of those three, whom does the press still listen to? And
Barney Frank.
Thank you, Tom.
When was this? 2009? Okay. Here's the Money Masters website. 1988. It's talking about another faceless, unelected group of bankers meeting. Because there's like, oh, just look at my notes. They're out of control. Hoover's Secretary of Treasury named Andrew Mellon, liquidate labor, liquidate stocks, liquidate the farmers, liquidate real estate. Bernanke says the Fed kept interest rates tight because they were worried about an attack on the dollar during the Great Depression. Yeah, because that's what Bernanke studied. He's bald. He's a bald Jewish man. And he did actually work, apparently. He like worked at a restaurant wearing like a costume, like a serving food. I like that. I like people who actually work. So I don't feel like Janet Yellen actually works. She seems more like an elite, honestly. But they raised interest rates instead of lowering them. Wrong thing to do relative to what the economy needed. 1933, Roosevelt abandons the gold standard. Yeah, what was going on there? They made it illegal for Americans to like own gold. They had to turn it in. They had to turn in their gold in 1933. Says the lender of last resort responded inadequately to the bank runs. when all the people go and want their money and you don't have it because you loaned it out. Like, I mean, are we really going to have to keep doing that? Because people are addicted to that. They don't want to stop doing that. You know, like the guy who wrote, you know, The Creature from Jekyll Island, he was talking to some guy who was like, I mean, this is how we get people to innovate and invest and, like, you know, I don't know, do stuff. And like, he likes it. He likes that we do that. So I don't know if we're going to be able to get people to agree on that. I don't know. They're just really addicted to it like a drug. 10,000 banks failed in the 30s until deposit, because, you know, the money's just sitting in there. It's just sitting in there. They hate that. And I can kind of understand that, but maybe it should just sit in there. Maybe you should just have the money you say you have. Oh, and because of that, we're able to, because of their loaning out our money, pretending they have it, they're able to pay us, you know, that tiny little like savings interest or whatever that they give us. But is it really worth it? Otherwise, it would actually be us just probably having to pay them to hold on to our money. So if we could get people willing to pay the banks to hold on to their money in the interest of not having the fractional reserve banking system, like, I don't know if we could get that. But anyway, oh, Lehman Brothers. They did actually let them fail. I forget what happened with Bear Stearns. I think, are these the three that did fail? Bear Stearns, Lehman Brothers, and Merrill Lynch? Goldman Sachs, Morgan Stanley. AIG was actually an insurance company. They're still in business, I can tell you that. Yeah, they bailed them out like 4 times. Their job is to maintain price stability and low inflation. Failure! Why they failed? Less financial crises. Dodd-Frank Act, large and complex bill. Consumer Financial Protection Bureau is formed. Federal Reserve Act. Nelson Aldrich. These notes are all over the place. For like 3 weeks, I was just trying to learn about, I was switching back and forth to like when the Federal Reserve first became a thing, even going back farther than that to like the Bank of England, which is like their central bank. Most countries have a central bank now. I guess Canada didn't for a long time, and they finally got one, and it was like, I don't know, like 1996 or something. It was like, I guess I should make sure. When did Canada get a central bank? They lasted a long time without it. The Bank of Canada opened in 1935, largely as a response to the Great. I thought it was way later. Huh. Maybe it was 1935. I swear there was something that they resisted doing until way more recently, though. But I don't know. Hold on. I'm going to switch topics again. Because I'm horrible at have all these links that I sent myself. What's this? History of federal banking. After the panic of 1907, Congress began to seek a preventative solution so that a banking panic would never happen again. Yeah, you know, a good way to prevent the panic is to just keep the money in the bank. Is that right? I mean, is that too simple? In order to accomplish this, they passed the Aldrich-Vreeland Act in 1908. The act allowed for the emergency production of currency in a crisis and created the National Monetary Commission. The commission's job was to investigate any necessary changes to national banking and currency law. They spent 3 years researching the problem and settled on a plan to create the National Reserve Association. Okay, but the problem is that it was made by bankers and not by people trying to help us and be good. And they're not really answerable to the government. It's weird. They're like independent. Yeah, there's 12 districts of the Federal Reserve System. It kind of reminds me of Hunger Games a little bit. Aren't there 12 districts? there was one, I think he was from the Kansas City Federal Reserve, Thomas Honig. He was like the one, that's what a lot of that book, Lords of Easy Money, written by like a Democrat guy who was like into regulation, and you know, it's kind of an interesting, like, this is something we could possibly agree with people, I don't know, in different political, there's people on both sides that can agree that it's not a great thing for people to have the Federal Reserve. Anyway, so Thomas Honig was like against all the printing of the money. And he dissented. At the Federal Reserve, to dissent is like a big deal. They'll usually discuss their votes before they meet, and they know how everyone's going to vote. They like it to look like a united front. It looks bad if it looks like there's arguments and debate going on at the Federal Reserve. Like, for people to even know that there is something to debate is not great. So they try to hide it. And there's a lot of like the lady who worked at the Dallas Federal Reserve talked about sort of like this snobbery that goes on there, how they like, most of them are like Ivy League schools and they have like PhDs in economics, and they sort of like make condescending remarks to people who, oh, you only have 2 masters or whatever, you know, like not really, not like a great environment for feeling like you dare to speak up. They don't like dissent. They, you know, so that for that Honig guy to vote against the rest of them so many times was kind of a big deal, because he was just like, we can't just keep doing this quantitative easing thing. It's gonna have a bad effects on the people. Yes. If you would like to see a real-life version of this seal, just look at any paper money. It's always located left of the portrait on the front of the bill. Okay, well, anyway, where are my notes? Yeah. I don't know. I just kind of got frustrated because they're, like, all over the place. Yeah, so Nelson Aldrich, his daughter married... He's the one who was supposed to, like, come up with something to prevent another panic, like 1907. So... I don't know. He was basically a banker himself. His daughter married a Rockefeller's son, and I don't know. What are Fannie Mae and Freddie Mac? My notes are so bad. Fannie Mae and Freddie Mac, I'm switching back to 2008 now, are large companies that guarantee most of the mortgages made in the U.S. Together, they are also known as the government-sponsored enterprises. Historically, they were private companies operating with government permission and under government regulation. In late 2008, following the financial crisis, the U.S. government took over operations at both companies. Loan guarantees from Fannie Mae and Freddie Mac reduce risk for lenders who make loans and investors who might purchase them. This makes loans more affordable and contributes to the availability of 30-year fixed-rate loans. Loans that are not eligible for Fannie Mae or Freddie Mac guarantees are typically more expensive. Okay, whatever. Okay, here's my notes from the Jekyll Island book. Loaning money you didn't earn and don't even actually have is usury. Okay, I agree with that. It's hot in here. I turned off the air conditioning because I didn't want it turning on. Also, interest on any loan is usury back in the old days. Now the definition is excessive interest. Okay, so now they say usury is anything, excessive interest on a loan, but back in the day, any interest on a loan was considered usury. Yeah. And then he talks about something called the Mandrake mechanism, where you convert debt into money. The Fed takes all the government bonds, probably meant to say bonds, which the public does not buy, and writes a check to Congress in exchange for them. It acquires other debt obligations as well, but most of its inventory is government bonds, which they call reserves. Fiat dollars, created on the spot, no money exists to back up their check. So this is how they create money, I guess. The Fed uses the bonds as the base for creating $9 additional for every dollar created for the bonds themselves. The money created for those bonds is spent by the government, and the money created on top of those bonds is the source of all the bank loans made to the nation's businesses and individuals. It's the same thing as creating money on a printing press. And I heard Bernanke actually calling it that, although at other times they're like, we don't just print money. You know, it's like, yeah, you do. It's just this long, weird, convoluted process where they're basically monetizing debt. And he said in the book, like, this doesn't make sense, so don't worry too much if you don't understand it. But it's just really frustrating for someone like me. I'm just like, I really want to understand it. Taking IOUs and converting them into spendable money. Discount window, aka the loan window. Banks' operating margin is thin. Only hold reserves for 1 or 2% of actual assets. There's a profit motive. They can loan $9 for each dollar borrowed. Open Market Committee. The open market operation. Purchase and sales of securities on the open market. Oh yeah, he says it doesn't make sense, but this is how they do it, and that the process isn't complicated, just absurd. Federal government adds ink to a piece of paper, creates designs around the edges, and calls it a bond or a treasury note. A promise to pay a sum with interest on a certain date. The bond is given to the Fed where it is classified as a securities asset. It's assumed the government will pay, so it's an asset which can be used to offset a liability. It creates this liability by creating another inked paper and exchanging that with the government in return for the asset. The second piece of paper is a Federal Reserve check. There is no money in any account to cover this check. Anyone else doing this would be sent to prison. Money created by the order of government with nothing tangible backing it. Yet the books are said to be balanced because the liability of the money is offset by the asset of the IOU. The Federal Reserve check received by the government is then endorsed and sent back to one of the Federal Reserve banks where it becomes a government deposit. Once the check has been deposited into the government's account, it's used to pay expenses and transformed into many government checks, and fiat money floods into the economy. Recipients deposit them into their own accounts where they become commercial bank deposits. On one hand, they are liabilities of the bank, but as long as they remain in the bank, they are considered assets. So again, the books are balanced. I don't understand this. It's fine. The deposits are used to serve additional purpose, reclassified as bank reserves. The commercial banks do their fractional reserve lending thing. Excess reserves are what they call that which they are allowed to now lend. Converted into bank loans. Second wave of fiat money. What was a loan on Friday comes back into the bank as a deposit on Friday. You mean Monday? I typed the wrong word there. Reclassified as a reserve, creating excess reserves, and now they can do loans. It's a hidden tax, equaling up to 10 times the national debt. Expansion and contraction of the money supply. I'm sure it makes sense, right? Like, it kind of makes sense to me, but I don't know. Debt-based Babylonian money system. Greatest something-for-nothing deal ever created. Yeah, we probably have to make it stop, right? It's just not going to work. Oh, and he goes into the Rothschilds formula because it's a part of it. Inflation is a tax. Tax redistributes wealth. Rothschilds formula. Oh, then he talks about Napoleon takes over after the French Revolution, refuses to borrow. He wants France in charge of their own money. Nathan Rothschild purchased the entire market in government bonds after being all sell, which made people think Napoleon won the battle. Perpetual wars in the 18th century England, easy to finance through central banking and fiat money, makes wars perpetual. So if you're against war, and the Fed, I guess. Maybe that's how we can get women. Yeah, our entire banking system is debt-based, so kind of sucks. And it's only gotten even weirder and more complicated to where, like, you know, people are like, there's a bubble. Like, it's weird, like, you don't really know where it goes. What was it called? Brooksley Born. Talking about, hold on, I have to look at, I was sending it to my friend. Brooksley Born. No, just look it up. I have no, what were they called? God damn it. she noticed it's the dark banking that she said she spotted it and she got shut down. But she was working for something called the CFTC. She was appointed by Clinton, and I guess she was friends with Hillary, whatever. But she pissed off Alan Greenspan because she was like, what? Where is it? Derivatives! Sorry, I was looking for that. Derivatives. So she noticed something weird going on with derivatives, and she was right, but they told her to shut up, basically. The dollar is a weapon. They pick the winners and losers, privatize profits, socialize losses. Yeah, it seems like they're just hiding it better. They're like, okay, let's try not to let there be like a sudden crash while we slowly rob them. We have to keep it like a soft robbery, like a slow, soft robbery. But if you look at the purchasing power of Americans declining over time, overall wealth, dude, millennials got fucked. So if you were born after 1980, I forget, I don't know when the generation cutoff is or if it's still going. So I'm technically a millennial because I was born in 84. It's weird though. But we're all living at home with our parents. I'm not, obviously. It's more men, actually. It's I think it was 36% of women living with their parents, and it was 50-something% of men, and just more people not leaving home because they can't. And there's nothing wrong with living with your parents, by the way. We kind of have to. If you don't have to and you can live, we've just suffered economically. We haven't been able to buy houses. We got the shit stick, is what I'm trying to say. Energy transfer. Wealth transfer for sure. Energy too, I guess. Anyway, I watched I guess it was called The Warning, and it was about how Larry Summers and Alan Greenspan and is it Robert Rubin? That's not right. Is it Jeff Rubin? Shit, I can't remember. These three guys being dicks to her. But then, of course, after the crash, they're like, oh, we were wrong. Everything we thought was... Ayn Rand, I want to hear them say Ayn Rand was wrong. She's like, I'm for a laissez-faire, absolute free market. So, okay, that sounds fine to me, honestly. I'm like, I don't really know what my opinion is, on how we keep it safe, So, if we take away the Federal Reserve, we're going to have to replace it with something. Well, I think this website probably has that all worked out. Hold on. I mean, do they? I pulled up. Okay, so this is an interesting website. I've been going for 48 minutes. Damn it. I don't know if I've really accomplished what I wanted to, but how to end the Fed and how not to. I just pulled this up by Gary North, 2012. He says it would be very easy to end the Federal Reserve System. Congress would write the following bill. The president would sign it. The Federal Reserve Act of 1913 and all subsequent amendments to that act are hereby revoked. The gold that belongs to the United States government and which is kept on deposit with the Federal Reserve System is hereby transferred to account of the United States Treasury. If the Federal Reserve System has made any secret agreements with other central banks regarding the ownership of that gold, those arrangements would become legally null and void. The Fed would own no gold of its own to deliver. Ownership would revert to the United States government. If other central banks wanted to sue the Federal Reserve System, an exclusively private entity acting on its own authority alone to recover any gold the Fed had promised to deliver, they would have the right to do so. If they really thought the Fed could deliver on those agreements merely because the court ordered it to, they could hire lawyers and sue. Andrew Jackson versus central banking. Yeah, Andrew Jackson said that was his greatest accomplishment was that he beat the banks. And it's kind of sad that now he's on a banknote, a $20 bill. He's on a Federal Reserve banknote. I didn't even realize. It's kind of ironic. I don't know, maybe not. But he wouldn't be happy. There is a legal precedent for all of this. In 1832, Henry Clay and his allies in Congress decided to make a political issue of the Second Bank of the United States, the Federal Reserve System of that era. It was a presidential election year. Clay proposed rechartering of the bank 4 years early. The bill passed Congress. The Wikipedia account of what happened next is accurate. A confrontation took place between Nicholas Biddle, the most arrogant central banker in history. I think that's the guy. He purposely wanted to cause a stock market crash in order to like make President Jackson look bad. Oh yeah, that's what it's talking about. How arrogant. He believes he could crush Andrew Jackson, and said so in private letters. Jackson mobilized his political base by vetoing the recharter bill, and the veto sustained, easily won re-election on his anti-bank platform. Jackson proceeded to destroy the bank as a financial and political force by removing its federal deposits. And in 1833, federal revenue was diverted into selected private banks by executive order, ending the regulatory role of the Second Bank of the United States. Yes, we've had other banks where they try to do this. In hopes of extorting a rescue of the bank, Biddle induced a short-lived financial crisis that was initially blamed on Jackson's executive action. So very, very shady behavior on Biddle's part there. By 1834, reckless. A general backlash against Biddle's tactics developed, ending the panic, and all recharter efforts were abandoned. In February 1836, the bank became a private corporation under Pennsylvania Commonwealth law. It suspended payment in 1839 and was liquidated in 1841. Jackson did not have to do anything else besides pull its accounts. The bank could not compete. It was a legal appendage of the U.S. government. Although privately owned, it went belly up. So with the Federal Reserve System, its profits would henceforth be taxed by federal and state governments. Its authority to regulate commercial banks would end. It would no longer establish reserve requirements. Okay, so that's proposed reforms. Whatever, we'll figure it out. We just need to end the Fed, okay? It looks like people have plans for what we'll do instead. Something better. Anything will be better. Because, God, I have too many notes. I haven't even, like... Okay, it says here about the wars. It starts... We've got the... So... The Bank of England is created, and then immediately after, it's like 1689 to 1697, the War of League of Augsburg, 1702 to 1713, the War of Spanish Succession, 1739, 1742, the War of Jenkins' Ear, 1744 to 1748, the War of Austrian Succession. Like, he was trying to say in the Creature from Jekyll Island book that, you know, French and Indian War, war against revolutionary France, Napoleonic Wars, like that these were being funded by the central bank somehow. War for Independence with America in the War of 1812. Monetary scientists were often seen funding both sides. And then he goes into the sinking of the Lusitania. Serbian nationalists, 1914, assassinate Archduke Francis Ferdinand in Hungary, huge affront to Austria, arms race preparing for war for a long time before World War I. Assassination was not the cause, just the trigger, an investment in war. England, France, heavily in debt, they turned to the Americans in the House of Morgan, acting as partners of the Rothschilds to act as sales agent for their bonds. Big money, motivation to keep wars going is high. Wall Street became the biggest industrial mart the world had ever known. Stocks and bonds, shells, cannons, submarines, blankets, wheat, etc. 1915, House of Morgan signs contract with British Army Council for horses. Total purchases eventually climbed to $3 billion. Morgan claimed to be a pacifist who hated war, obvious lie. Germany's U-boats almost won the war, World War I that is, before the U.S. entered. Between 1914 and 1918, U-boats sunk over 5,700 surface ships. Arthur Balfour, British Foreign Secretary, says, at the time, it certainly looked as though we were going to lose the war. Colonel Edward Mendell House, personal advisor to Woodrow Wilson, and later to FDR, close contacts with J.P. Morgan and old banking families of Europe, the Fabian Society. Wealthy, made money during the war between the states from a Confederate state. Basically got Woodrow Wilson elected. He's a kingmaker. House hand-selected many of the government position appointments. Very influential! Formulated the first policies of the administration and conducted foreign affairs of the U.S. ambassador. Secret agreements to get the U.S. into war. House has confidential talks with William Weissman, intermediary between House and British Foreign Office. Secretary of State William Jennings Bryan didn't like this. Newspapers and press owned by J.P. Morgan, a lot of them, particularly in the East, given lots of donations by Rockefeller, Morgan, and start denouncing the big Germans enemy type. Okay, so Germans are our enemy. They start funding that in the newspaper. The American people weren't buying it, 10-1 in favor of staying out of Europe's war. Morgan's control over shipping and railroads. I don't know. Oh, geez. I don't know what I was thinking. This is too much information. January 30th, 1835, Richard Lawrence attempted to assassinate Andrew Jackson. He had both pistols aimed at him. Both pistols misfired. Found not guilty by way of insanity, and later he boasted he had been in touch with powerful people in Europe who had promised to protect him from punishment if he was caught. And he was protected. No, he was found not guilty. 1836, bank thing expired and Nicholas Biddle could fuck off. U.S.'s third experience with central banking came to a close. Chapter 18, the Civil War. It's not even money. It's based on nothing. It's based on less than nothing. It's based on debt. Knights of the Golden Circle, Jacob Cook pamphlet, how our national debt may be our national blessing. Oh, man. Okay, so they've been trying this shit for a long time. Catherine Austin Fitz. Sounds familiar, but I don't know who that is. Dylan Reed and Company, eh? Is she evil or not? I mean, it says banker. Just kidding. Designed and closed over 25 billion assets. Solari Report. Publisher of the Solari Report. Huh. I'll have to learn a little more about her. I don't really know who that is too much. I'm surprised I didn't come across her name. Montague Norman was the governor of the Bank of England. It says H. Parker Willis wrote the final draft of the Federal Reserve Bill before becoming disillusioned with the cartel. Yeah, because he kept calling it a cartel because they consolidate their powers into Kuhn Loeb came up a bunch. 1924, there was a burst of inflation. Oh, J.P. Morgan pretended to be an anti-Semite. That is so funny. He pretended to be an anti-Semite so that people would trust him more when it came to banking stuff. Emergency currency called script authorized again for emergencies. Going to the discount window. Banks borrowing money from the Fed. Discounting commercial paper. The way the Fed floods the nation with new money. Jerome Powell, the current chair of the Board of Governors of the Federal Reserve System, is the head of the Federal Reserve and is the active executive board of the Board of Governors of the Federal Reserve System. I watched Janet Yellen testifying before Congress. There was some guy talking to her about the rise of the cost of fertilizer, and she kept refusing to show up at the Small Business Committee to discuss the PPP loans. Is that Paycheck Protection something? She was required by law. I kept seeing them be like, why do you refuse to come talk to us? Like, you're required by law to do that. And I don't know if she ever did. There's that whole GameStop thing. Predatory lending. A lender owned by private equity firm Warburg Pincus LLC was sued on Tuesday by several U.S. states and accused of charging cash-strapped borrowers hundreds of millions of dollars for hidden add-on products that they never agreed to buy. That sounds like a recent story. What is that? Okay, how do I open it? I just saw it. Open. I'll just like save links randomly to my notes. Okay. What is this from? What date was this? August 16th, 2022. Weird. They're still doing it. This is a recent story. Warburg. Really? I don't know. Marine or finance? Pennsylvania, New Jersey, Oregon, Utah, Washington State, and what? Encouraged employees to trick borrowers into refinancing loans unnecessarily to generate higher fees and sell more add-ons. Okay. All right. There's a book called The Greatest Trade Ever, written by Gregory Zuckerman. I guess it's about John Paulson, and that's what like The Big Short was based off. The dot-com bubble burst. Dude, I gotta like focus on one thing. I don't know what the hell I was thinking. I'm just like, I'm gonna talk about the entire history. This is the Taylor rule. I don't know what that is. Quantitative easing. The Glass-Steagall Act was part of the Banking Act of 1933. I think that is the Federal Reserve Act, right? That's what they called it. I don't know. The TED spread. The TED spread is the difference between the 3-month Treasury bill and the 3-month LIBOR based in US dollars. To put it another way, the TED spread is the difference between the interest rate on short-term US government debt and the interest rate on interbank loans. TED is an acronym for the Treasury Euro Dollar rate. Too much information, Heidi. What are you doing? Okay, 3 factors that drive inflation. Prices and inflation are driven by 3 factors: the consumer price index, CPI, producer prices, and the employment index. Most nations in the modern day look at the consumer price index as a whole rather than look at core CPI. This method allows an observer to look at the total picture of an economy in terms of prices and inflation, since core CPI excludes food and energy prices. Yeah. So if you're excluding food and energy prices, which are like 2 of the major things that affect like the average little people, like your citizens, your common man, you know what I'm saying? Normal people, average citizens. Rising prices mean higher inflation, so Taylor recommends factoring the rate of inflation over 1 year or 4 quarters for a comprehensive picture. He recommends the real interest rate should be 1.5 times the inflation rate. So there's like math and stuff. This is based on the assumption of an equilibrium rate that factors the real inflation rate against the expected inflation rate. Taylor calls this the equilibrium, a 2% steady rate equal to a rate of about 2%, but it's so boring. I'm sorry. So like there's this thing they do to purposely make people they sort of get bored. Like for instance, okay, so Greenspan, they called it Fed speak, and I have an example in my notes here somewhere. My notes are like 40 pages long almost. But the way he would talk when he was speaking publicly made everything he was saying much more difficult to understand. You would think you'd try to make it understandable for the layman, but no. He doesn't want us to understand what he's saying. And behind closed doors, we have transcripts of like their FOMC meetings. He talked in a much more normal, understandable way. So it is kind of malicious, in my opinion, the way they purposely mislead and obfuscate. You know, they want you to be confused and they want you to feel stupid and not question what they're doing. So that's important. I just wanted to say that. The Inflation Reduction Act is now law. Here's what it means for you, by Kellyanne Smith. The bill is a major accomplishment. So this is, recent news. The bill is a major accomplishment for Democrats who have been struggling for months to pass Biden's ambitious social and climate policies, as well as his vision to raise taxes on the rich. The legislation, oh, by the way, the gap between rich and poor has been widening. They're killing the middle class, Legislation includes large investments in making healthcare and prescription drugs more affordable. Don't even get me started. Fighting climate change. Oh, wonderful. So worried about that. And taxing wealthy corporations. Americans can expect to see the continuation of Affordable Care Act premium subsidies that lower the cost of. Is the Affordable Care Act still a thing? I thought Trump got rid of that. Savings from other provisions in the bill won't kick in until the future. Okay, maybe I should pull up some Barth. Professor Barth. While I figure out what I'm doing. An hour. I like this guy. Maybe he's got. Can I search his channel?
Hello, everybody.
Can I search like his only, like quantitative? Oh, he's talking about quantitative tightening. The insanity of not ending QE now. Well, okay. Well, this is more recent.
Hey, did you know that Rocky Mountain?
Oh God. Damn it. If I were signed into my other thing, I could skip the switch. Okay, while he's battling. That's what they're doing right now is quantitative tightening. So the Inflation Reduction Act, creation of a 15% corporate minimum tax rate, prescription drug price reform, IRS tax enforcement. Oh, yeah, they got 80 billion. Yeah, so they can come after more of the little man. Affordable Care Act subsidy extension. Oh shit, I didn't even know that was in there. It's not like I have any control over it. Energy security and climate change investments. QT rug pull. Yeah, should be exciting, I guess. Oh my God, this. Oh, okay.
Professor Barth is here, history professor at Arizona State University. What is quantitative easing? We're going to answer that in this video. QT, what the heck is it? You'll have a solid understanding by the end of this video. Last week, as you are aware, the Bureau of Labor Statistics announced that annual inflation jumped 7.5% in January. Now, the FOMC, the Federal Open Market Committee, the Federal Reserve, will meet on March 15th and 16th and make a decision about interest rates. They will raise rates by either 0.25% or by 0.5%.
When was this?
The last time the Federal Reserve raised rates by more than 0.25% was 22 years ago in the year 2000.
18.
But with inflation now at a 40-year high, they just might do it. The president of the St. Louis Federal Reserve, James Bullard, who's serving on FOMC this year.
Yeah, so Janet Yellen, she kept refusing to raise interest rates. Oh, and she called it transitory. She said, or maybe this was different. She was talking about like oil. I don't know. Well, I have notes on it. We'll
warned recently that inflation
could,
quote, get out of control, end quote, if the Fed doesn't take aggressive action. And he's saying that rates, the federal funds rate, needs to be a full percentage point by July. So we will see. The Fed released its minutes.
And when they raise interest rates, I think they call that they call you hawkish, which it's sort of like as opposed to dovish, but it's like you're being meaner to, I guess, the stock market. I'm probably explaining it wrong. I'll just let him explain it. But yeah, I learned that hawkish and dovish mean kind of different things than you might think. Like hawkish means you're being a meanie and you're raising the federal funds rate and you're tightening the money supply, so you're being a mean hawk. And then when you're dovish, you're like printing the money.
From their January meeting earlier this week, and it showed that they intend to begin quantitative tightening, QT, later this year after they begin raising the federal funds rate. So presumably the federal funds rate will go up in March, then May, June, July, and then we'll probably see QT launch in late summer or early fall. So what is quantitative tightening? Quantitative tightening, or QE,
So
is a
much better at it
reduction
than me. I
in
need
the
to do stuff
size
like
of the
this.
Fed's balance sheet. Stated differently,
I need help.
it's a reduction in the number of assets owned by the Federal Reserve, and it's the opposite of quantitative easing. Under quantitative easing, the Fed purchases treasuries and mortgage-backed securities with currency, US dollars, created out of thin air in order to make those purchases. That treasury note then becomes an asset of the Federal Reserve System. The currency that the Fed generates and then uses to purchase that treasury note is transferred over to the account of the bond dealer, which is generally tied into the private banking system. One of two things happens to that money once it enters the account. The bank either stows it away in their reserve account at the Fed, increasing their reserve balance, in which case the money does not enter circulation, or the bank utilizes that currency and the money supply of the overall economy increases.
If you're currently in the
What the
market to buy a
heck?
new home, did you know that there's an option that's not really
Okay, stop. Oh crap! I just X'd out of those notes. I'm an idiot. Ugh! Oh god. I don't know. I don't know what I'm doing. What else? What else? What else? Yeah, so the greatest trade the greatest trade ever, they made money off of the thing, which I kind of wish I could have. They called it credit default swaps. Unfortunately, I don't know anything. I have some Bitcoin, but I'm starting to worry. I'm like, is that crashing too? Is that like, I don't know. Okay, here's a New York Post story about Michael Burry, the Asperger's-ish kind of guy that Christian Bale played in The Big Short. So recently, should we play it?
True. A few people know a lot. Michael Burry knows a lot. He's one of the smartest people in American finance. Who was Michael Burry? Well, he was one of the very few Americans who understood that the housing bubble of the late 2000s would lead to system-wide destruction of our economy, which, of course, in the end it did. How did Michael Burry manage to see that coming? Well, unlike most investors, he's also a physician. He is trained to assess problems empirically on the basis of evidence rather than theory. If you're interested in the details of what Burry was...
I'm more into silver, though. Because like that Masters of Money documentary said, there's like, I don't know, we have way more silver if you're in America anyway. I guess I shouldn't assume everyone's in America.
2007 and 2008, read or watch The Big Short, which is based largely on his predictions of the last financial crash. So with that in mind, what is Michael Burry saying about the economy now? Well, among other things, Burry is highly concerned about something called modern monetary theory, MMT. MMT is essentially the belief that big governments like ours can pay for everything indefinitely simply by printing more money.
Yeah, modern monetary theory. That's like, it's like both sides of the aisle. There's people who are like, deficits don't matter anymore. We're beyond that.
That's an old idea, but there's a problem with it. Printing more money causes inflation, inevitably. No one denies that. It's always true. What makes MMT new and alluring is that its theorists claim to have a solution to that problem. Radically increase taxes. Less cash in the system would mean less inflation. If people don't have income to spend, prices can't go up as quickly. When you have no money, you can't overpay for goods and services. No inflation.
I don't know if that means you actually have it or what.
To a certain kind of socialist academic, it all makes perfect sense. What does the public think of this plan? Well, no one's asked them because nobody cares. But Michael Burry thinks the rest of us should be prepared for the consequences.
CDOs.
Quote, the U.S.
It
government
just sucks.
is
Like,
inviting
I was studying like all this stuff for like 3 weeks straight, and I just feel like I can't like put it into words like what I learned. I'm trying to share what I've learned, but I still feel like there's way too much I don't understand.
inflation with its MMT.
I'm like, I know what a CDO is kind of now.
Burry wrote over the weekend in a series of tweets. Burry went on
Not
to quote
really.
extensively from a 1974 book called Dying of Money, which explains what Germany looked like 100 years ago, right before hyperinflation there changed that
Oh
country.
yeah, hyperinflation in Germany. Okay, so like this kind of backs up the whole like we're living in Weimerica thing, right? Some people say that the German economic miracle wasn't really, I don't know, they're naysayers about it, but I would like to study how they got, because they were not suffering and the rest of the world was. So
the rest of the world forever. As it
During the Great
collapsed, the
Depression.
German economy took on, quote, unmistakable characteristics. One was the great wealth, at least of those favored by the boom. Many great fortunes sprang up overnight. The cities had an aimless and wanton youth. Prices in Germany were steady, and both business and the stock market were booming. The exchange rate of the mark against the dollar and other currencies actually rose for a time, and the mark was momentarily the strongest currency in the world. Side by side with the wealth were pockets of poverty. Greater numbers of people remained on the outside of the easy money, looking in, but not able to enter. The crime rate soared. Accounts of the time tell of a progressive demoralization which crept over the common people, compounded of their weariness with the breakneck pace to no visible purpose, and their fears from watching their own precarious positions slip, while others
am I allowed to watch this? I hope so.
grew so conspicuously rich. Speculation alone, while adding nothing to Germany's wealth, became one of its largest activities.
This is news. This is
The
fair use.
fever
This
to
is
join
commentary.
and turning a quick mark infected nearly all classes. Everyone from the elevator operator up was playing the market, end quote. And then, inevitably, of course, it all collapsed. Quote, the Deutschmarks that existed in the world in the summer
I
of
think we're headed for a
1922,
collapse of
all
some
them
kind, maybe.
were not worth enough by
They can't
November of
soft land it
1923
forever.
to buy a single newspaper or a tram ticket. That was the spectacular part of the collapse, but most of the real
gonna be
loss
big.
in money wealth have been suffered much earlier, end quote. A book worth getting. Does it sound familiar?
I'm going
Don't
to read
think
whatever
about
that was.
assures the Biden administration. We've got a female Treasury Secretary. The critical diversity component of American economic policy has been covered. Rest assured. But Michael Burry isn't resting assured.
It's
and he's not convinced.
transitory.
Yesterday,
Funny
he sent
story.
this tweet. People say I didn't warn last time. I did, but no one listened. So I warn this time, and still no one listens. But I will have proof I warned. Nobody knows anything.
Mute. Stop. Pause. There was another quote from Michael Burry because he deletes his tweets. It's weird, but he said, let me see. It was pretty good. As I said about 2008, it is like watching a plane crash. It hurts. It is not fun, and I'm not smiling. Michael Burry. But he said something about World War III. That's actually what I was looking for. Something like that.
On May 19th, 2005, Michael Burry bought his first credit default swaps in anticipation of the housing crisis. 60 million of credit default swaps from Deutsche Bank, 10 million each on 6 different bonds. His prediction? The US mortgage-backed security, once a stable, respectable investment product, had slowly turned into a dangerous and deceptive time bomb, all caused by greed and corruption. In his eyes, this bet was no gamble. He did the digging. He read the documents. He knew what the outcome would be. His problem was that it would take the rest of the world another 2 years to even start looking. It took until the 11th of October 2007 for the S&P 500 to top out at 1,576 points. A year and a half later, on the 10th of March 2009, the S&P closed at just 676 points, a 57% crash. Michael Burry ended up making a personal profit of $100 million and made his investors over $700 million from this single bet. But in the years leading up to this amazing success, he received constant criticism from the investing world and even his own investors. Criticism that ultimately led him to close his fund after all had been said and done. But why am I telling you about this now? This happened 15 years ago. Well, you guessed it. History is currently repeating itself.
The first one to see that something was seriously amiss in the burgeoning subprime.
None of your business says, difference between us and Weimar is that we hold the reserve currency. The whole world is in our shit basket. When this bubble pops, it's a global shitstorm. Oh.
Prime mortgage market was Dr. Michael Burry.
I can see the credit standards within these pools deteriorating.
So you made a ton of money.
I was extremely confident in the outcome.
Were your investors as confident?
It's remarkable. There are investors who made tens of millions off this, and we're still pretty upset.
It was back in February of last year that Michael Burry first warned of high inflation as a consequence of the Fed's unprecedented money printing. He was tweeting to prepare for inflation, hashtagging doomed to repeat, and calling out the US government and the Federal Reserve over the trillions of dollars worth of stimulus they'd done. And at this point, he was the contrarian. At the time, all looked well. You know, the Fed was printing money, yes, but inflation was staying low. At the time, the latest published data showed an annual inflation rate of just 1.7%. That's lower than the Fed's target. But in classic Burry fashion, he was just early. Fast forward 12 months and we're now running at a red-hot inflation rate of 8.6%. Habitually be 1 to 2 years early on literally everything, and you too can attain broken clock status, Burry tweeted a month ago, of course referencing a tweet made by Elon Musk where he labeled Burry as a broken clock. But what's very interesting is that in the past month or so, Michael Burry hasn't just been doing victory laps. Instead, he's been tweeting quite extensively explaining why he believes this economic crisis and subsequent market downturn has only just begun. Now, I certainly don't like to be a big doomsday predictor on the channel, so please don't take this video as me fear-mongering. However, I do want to at least cover Michael Burry's full rationale to begin to understand what he's thinking. And yes, the overarching message is he believes the worst is yet to come. So much so, he thinks the S&P 500 could lose another 50% from where it sits today. On May the 3rd, Burry tweeted regarding paradigm shifts and speculative peaks, the S&P 500 bottomed 13% lower than 2002's bottom in 2009, 17% lower than 1998's LTCM crisis low in 2002, and 10% lower than the 1970s low in 1975. 15% lower than the COVID low is an S&P 500 value of 1,862, roughly Shiller PE of 16, nominal PE of 9 in historic.
Right, so that LTCM crisis that he's mentioning that happened in 2002, that's what Brooksley Born was trying to kind of, I guess, well, it's what happened after she was shut down, trying to say something about it, and it kind of proved her right.
Range. I'm not going to lie, I had to read that one quite a few times to actually get that phrasing. But what he's noting is the trend we've seen over the past 25 years is the bottom of a current market crash is usually lower than the one that came before it by about 10 to 15%, adding that 15% below the S&P 500 low that we saw in 2020 takes us down to 1,862 points. That's crazy because it shows that Michael Burry is anticipating a peak to trough fall of 61.4%, which would bring us back down to the historical normal Shiller PE of roughly 16. Essentially, from where we are today, Michael Burry anticipates a further 50+% drop-off in the stock market. It's a bold prediction, and it's a prediction that was once again met with criticism, as over the past few weeks, we saw the market bounce 6.5%. But as we've seen even just across the past few days, short-term bounces certainly don't mean we're out of the woods. And Michael Burry actually commented on this possible scenario. He recently tweeted, quote, "Dead cat bounces are the most epic. 12 out of the top 20 NASDAQ one-day rallies happened during the 78% drop from the 2000s top. 9 of the top 20 S&P 500 one-day rallies happened during the 86% drop from the 1929 top. Again, that's a lot of numbers to wrap your head around, but what he's alluding to here
Where
is
did he
that
talk about
even
World War
during the
III?
worst
Hold on.
times, the statistics show that it's actually
Michael
quite
Burry.
common to see strong short-term recoveries.
The Pope just recently publicly said that World War III had already been declared. So there's that. For anyone who cares about that, I don't know. I'm keeping an eye on
Michael Burry, World War III
the mention
warning.
of.
Michael Burry, the man who famously
And then Russia issued a warning to the United States about us sending like long-range weapons. They're like, you've been warned. I'm scared.
predicted the subprime mortgage crisis, says he has done the math, and a global financial meltdown that will lead to World War III is on the horizon, and we're marching towards it at an ever-increasing pace. Today we're going to talk all about Michael Burry's World War III warning. So watch the video till the end, because around Burry to the end, and make sure in the comments. Now let's get to our topic. As NewYorkMag.com reports, Burry answered questions by email, his preferred method of communication, as viewers of the film will attest. The real-life head of Scion Asset Management spoke about the state of the financial system and his ominous predictions for the future. I didn't go out looking for this, he said. I just did the math. Every bit of my logic is telling me the global financial system is going to collapse. It's not a question of if, but when. It's rotten to the core. Just as most of the so-called smartest men in the room ignored his predictions last time, every status quo maintaining, asset gathering, commission taking opportunist will be quick to shrug off his warnings this time too. Burry is arguing that anyone who studies the financial markets honestly and without prejudice will recognize the same flaws and arrive at the same conclusion as him. He is angry with international regulators for refusing to listen to warnings from outside a small elite cabal of advisors.
Cabal.
It's almost as if they're looking out for themselves, paying the consequences. I feel like I'm watching a plane crash. I have this dream again and again. I know what's happening, but there's nothing I or anyone else can do to stop it. Famously portrayed in 2015's film The Big Short, Burry suffered an investor revolt before his subprime mortgage housing crisis prediction came true. He was considered crazy, mentally ill, and dangerous. He was ostracized when he was taxes, but covered its deficits with war loans, treasuries, and issues of new paper Reichsmarks, dollars.
Oh, it's talking about Germany.
Doomed to repeat, Burry tweeted. History is not useless, he said in another tweet. This text explores the 1970s American inflation, which is more relevant today than one might think. Burry also drew
it's all connected
to
that's why it's hard to like stay in the current, because it's all connected to like the entire history of our
and the Reddit fueled buying of meme stocks this year that led Robinhood to
financial
temporarily halt purchases of certain stocks. Before the German hyperinflation in the 1920s, everyone from the elevator operator up was playing.
Okay, where are my notes? I'm just gonna sort of get through these, I guess. I don't know. Taylor spread, who cares? Basis points. Okay. Talks about the bill that just got passed. Study shows bill will likely have no impact on inflation. In a statement released after the Senate's passage of the bill, Biden asserted that the legislation would bring inflation relief to Americans. But one early study shows that, in reality, the Inflation Reduction Act likely won't reduce prices at all. According to the Penn-Wharton budget model, there's low confidence the legislation will have any impact on inflation. PWBM is a nonpartisan research-based organization at the University of Pennsylvania that creates economic analysis of public policy's fiscal impact. During an interview with CNN, Manchin said he respectfully disagrees with the study. Manchin? Okay. I got confused. I started thinking of Jeff Mnuchin. That's another person. According to the Congressional Budget Office, a federal agency that provides budget and economic information to Congress, the bill will barely make a dent on inflation in the near term and could even nudge it upward. Wonderful. The CBO estimates it will have a negligible effect on inflation in 2022, and in 2023 it will change inflation somewhere between 0.1 percentage point lower and 0.1 percentage point higher than it is currently. So it could either go up or down. We don't even know. Even if it won't move the needle on inflation, the CBO also estimates the bill will decrease the deficit by more than 100 billion over the next decade. The federal government ran a deficit of 2.8 trillion in 2021, according to the Bipartisan Policy Center. The bill's estimated deficit reduction will wipe out about 4% of that. Though the bill may fall short of bringing immediate price relief to consumers, it's monumental in other ways, according to the Wilderness Society, a nonprofit land conservation organization established in 1935. The Inflation Reduction Act is described as a breakthrough on climate policy. Oh, well, I'm glad someone's happy. Yellen skips House Small Business hearing, defying legal requirement and angering both parties. Yeah, that's what I was talking about before. Harriet Tubman on the $20 bill. I've been hearing about that for a long time, and it still hasn't happened. Yellen's lifelong mentors are James Tobin and William Brainerd, and she's married to George Akerlof. Okay. What is supply-side economics? Supply-side economics is better known to some as Reaganomics, or the trickle-down policy espoused by 40th. Oh, okay. President Reagan and his Republican contemporaries popularized the controversial idea that greater tax cuts for wealthy investors and entrepreneurs provide them with incentives to save and invest and produce economic benefits that trickle down into the overall economy. He often quoted the aphorism, "A rising tide lifts all boats," to explain his take on the theory. The power of the Fed. Okay, and then I watched The Money Masters and took notes on that. Money changers were in the temple. Oh, no, I was talking about Jesus now. Money changers were in the temple because when Jews came to Jerusalem to pay their temple tax, they could only pay it using the half shekel of the sanctuary, a half ounce of pure silver, the only coin around that was pure silver and of assured weight without the image of a pagan emperor, but they weren't plentiful. The money changers had cornered the market on them, and then they raised the price to whatever the market would bear, making exorbitant profits which violated the sanctity of God's house. In Jesus's opinion. Why did I write that? But the scam didn't originate in Jesus' times. Rome too did stuff. Julius Caesar took back the right to coin money from the money changers, possibly a factor in his assassination. Tally sticks. King Henry made people use them. British Empire built under tally stick system. Roman eagle on a red shield. Amschel Bauer changes his name to Rothschild. Loaning to kings is more profitable than loaning to private individuals. Amschel Mayer, his first son, stays in Frankfurt, Germany to man the hometown bank. Second son, Solomon, is sent to Vienna. Third son, Nathan, sent to London, the most clever son. Fourth son, Karl, goes to Naples. Fifth son, Jacob, goes to Paris. And this is 100 years after the Bank of England was established. They financed Cecil Rhodes, enabling his diamond and gold monopoly in Africa, financed Harriman's and railroads. There's a city in Utah called Harriman, and I think that guy was from Utah. Yeah. Colonial script in the U.S. Hamilton. I was thinking about this. Why did that guy make a musical about Hamilton? Like, of all people, why would he choose him to make like a musical about? It's just weird to me. He's the one who kind of started this shit. Anyway, Secretary of the Treasury and his mentor Morris ran a privately owned central bank through RAM. He wanted to ram. They both what? Hamilton and Morris rammed a privately owned central bank through the new Congress called the First Bank of the United States, even though it was actually the second bank. And only the name was changed, same as the last. Okay. 1787, colonial leaders assembled to replace the Articles of Confederation. Thomas Jefferson and James Madison are opposed to private bank controlling the issuance of our currency. Governor Morris defects and is no longer supportive of the bank. Napoleon borrows 5 million pounds from a banking house in Paris. I thought he didn't want to borrow money, though. By the mid-1800s, Rothschild's richest family in the world after the Bank of England and Napoleon War battle debacle. Okay. January 8th, 1835, Jackson pays off final installment on national debt. Only president to ever pay off the debt. Good job, Jackson. Richard Lawrence tries to shoot Jackson a short time later, and both pistols misfire. Not guilty by reason of insanity. Charter runs out, and second bank ceased functioning. After second term as president, Jackson retires, and he killed the bank, and it took the money changer 77 years to undo the damage. Jackson's proudest accomplishment. Back to war to create debt and central bank dependency, just like they did in 1812 after the first bank was not recharted. Civil War. Otto von Bismarck in Germany. Oh, God. 1861, Lincoln and Salmon P. Chase go to New York to ask for loans. The money changers offered loans at 24 to 36% interest. Lincoln said thanks, but no thanks. And went, I heard, what's his name, talking shit on this documentary. He said it was a good documentary. It was Ryan Dawson. He said it was good, except for he hates Lincoln, and he thought it was trying to make Lincoln look good. Lincoln sends his friend Colonel Dick Taylor of Chicago and put him to work on the task of financing the war. He told Lincoln to get Congress to pass a bill authorizing the printing of full legal tender treasury notes and pay the soldiers with that. 1962 to 63, Lincoln printed up to $450 million worth of the new bills in green ink, greenbacks. Whatever. Okay. The return of the gold standard. Federal Reserve Act passed. Okay. Silver is plentiful. Gold is scarce and easy to monopolize. So that's why I'm kind of anti-gold. Here's a Lincoln quote. The money power preys upon the nation in times of peace and conspires against it in times of adversity. It is more despotic than monarchy, more insolent than autocracy, more selfish than bureaucracy. 1994 Regal Act, that's 1994, authorized the replacement of Lincoln's greenbacks with debt-based notes. They were in circulation until 1994. I don't know what I'm talking about. I don't know. These notes are incomplete, so it might not make sense. Economists try to sell the idea that recessions and depressions are a natural part of the business cycle. Truth is, money is manipulated now just as it was after the Civil War. Money became so scarce because bank loans were called in with no new ones given. Silver coins were melted down. 1872, Ernest Sade sent from England to the U.S. to bribe U.S. congressmen into demonetizing silver. The next year, the Coinage Act did just that. Minting of silver dollars abruptly stopped. Sade wrote the bill and admitted it was in the interest of those he represented, the governors of the Bank of England. Oh, well, wonderful. 1876, 1/3 of U.S. workforce was unemployed. They wanted the greenback or silverback, whatever will make money more plentiful. Deliberate money contraction after Civil War. The press tries to turn people away from the truth. February 28, 1878, Congress passes the Sherman Law, allowing the minting of a limited number of silver dollars. Didn't end gold backing of currency, nor did it completely free silver. 3 years later, Republican James Garfield was elected president. He understood how the economy was being manipulated, publicly slams the money changers in 1881. Whoever controls the volume of money in any country is absolute master of all industry and commerce. And when you realize the entire system is very easily controlled one way or another by a few powerful men at the top, you will not have to be told how periods of inflation and depression originate. That's his quote. And then July 2nd, 1881, he's killed. Assassinated. This article says Charles Gutow may have shot him, but his own doctor really killed Garfield. Okay. 1891, ABA, American Bankers Association memo sent out calling for bankers to create a depression on a certain date 3 years in the future. On September 1st, 1894, America was on the gold money standard. Very easy to manipulate this way. 1896, William Jennings Bryan runs for president on the free silver issue. Won the nomination after his speech, Crown of Thorns, Cross of Gold. It's a famous speech. Running against McKinley, who beat Bryan by a small margin. That's too bad. Bryan only served 2 years later in the Wilson administration and resigned after the sinking of the Lusitania. Never became president, but he kept the bankers at bay. J.P. Morgan's father, Junius, dies, and J.P. doesn't actually have any money. Panic of 1907. Morgan and his friends are able to crash the stock market. Bank runs ensue across the nation. Okay, so it was on purpose. Morgan solves the crisis. He created the problem so he could solve it. Okay. Morgan solves the crisis with the money he created out of nothing. Woodrow Wilson praises him in 1908. Charles Lindbergh Sr. explains the panic of 1907. Basically, it was really just a scam. And to claim the banking system is so unstable, it needs to be consolidated into a central bank once again. What? I don't know what I was saying. Oh, there was a scam so that they could say we need the central bank. I get it now. Teddy Roosevelt signed into law a bill creating something called the National Monetary Commission, meant to study the banking problem and make recommendations to Congress. The commission is packed with Morgan's friends, J.P. Morgan that is, and cronies, including Senator Nelson Aldrich. You know, Aldrich, that guy, secret meeting, Jekyll Island guy, whose daughter married John D. Rockefeller, and they had 5 sons. Aldrich goes on a 2-year trip through Europe, which cost taxpayers $300,000. Returns November 22nd, 1910, and the secret meeting happens on Jekyll Island. Paul Warburg, who was paid by investment firm Kuhn Loeb & Co. to lobby for the passage of a central bank bill for a $500,000 per year salary. Good for him. Warburg's partner in the firm, Jacob Schiff, being sarcastic, grandson of the man who shared the Green-Shield house with the Rothschilds family in Frankfurt, Schiff is also financing the overthrow of the Tsar in Russia. Spent $20 million on that. Rothschilds, Warburg, Schiffs, all interconnected through marriage. Well, good for them. Isn't that great? Isn't that great? Okay, how long have I been going? Oh my God, it's almost 2 hours. Frank Vanderlip confirmed the Jekyll Island trip, one of the attendees. Bonds are just promises to pay, IOUs. Step 1, the Federal Open Market Committee approves the purchase of U.S. bonds. Step 2, bonds are purchased by the Fed. We've already covered this. We get it. It's a stupid process. Yeah, I get it. They can loan out over 10 times the amount in the reserves. Okay, yeah, all at interest. To reduce the amount of money in an economy, the process is reversed. The Fed sells bonds to the public, and the money flows out of the purchaser's local bank. Loans must be reduced by 10 times the amount of the sell. So a Fed sell of $1 million in bonds results in $10 million less in the American economy. How did this benefit the Jekyll Island bankers? Misdirected banking reform efforts from proper solutions. Prevented debt-free system of finance, such as Lincoln's greenbacks from making a comeback. The bond-based system of government finance forced on Lincoln after he created greenbacks was not cast in stone. Okay. Delegated to the bankers the right to create 90% of our money supply based only on fractional reserves, which they then loan out at interest. Centralized overall control of our nation's money supply in the hands of a few men. Established a central bank with a high degree of independence from effective political control. Soon after its creation, the Fed's great contraction in the 1930s caused the Great Depression. The Aldrich Bill was quickly identified as the banker's bill, the money trust. Baruch is Woodrow Wilson's handler, basically. Took Wilson to New York, where he received an indoctrination course at Democratic Party headquarters. He was learning about banking from this guy who was his handler, basically. So he was easily manipulated and fooled. Democrats pretend to be against the bill. Glass-Owens bill, same bill, different name. William Harding died possibly suspiciously. They say pneumonia and food poisoning, but he was a good president and they probably killed him. McFadden says the bankers caused the crash on purpose. They had withdrawn their money. Okay, yeah, McFadden. What's his first name? Is it Lewis? They had withdrawn their money. Morgan, for example, the day before. McFadden thinks they did it to steal our gold because they withdrew their money and put it into gold. Apparently, I was a little confused there. I wasn't sure what I was. Fed continues to brutally contract the money supply further, deepening the depression instead of quickly lowering interest rates to stimulate the economy. Between 1929 to 1933, they reduced the money supply by an additional 33%. The Fed was the cause of the depression. Milton Friedman agrees. The money was redistributed, not lost, went overseas and to the bankers. McFadden thinks we were paying for rebuilding Germany through the Federal Reserve Board to repair Germany after World War I. And then I said, FDR railed against the money changers at first, like March 4th, 1933 inaugural address. He mentions it, but then 2 days later, he declared a bank holiday and outlawed private ownership of all gold bullion and all gold coins except for rare coins. It was a confiscation. You risk 10 years in prison and a $10,000 fine if you disobeyed. It was what the experts wanted. He said it was necessary to get America out of the Depression. Fort Knox is where they put the confiscated gold. 1935, all the gold has been turned in, and the price of gold is suddenly raised to 35 per ounce. Where is the gold? Time for another big war. 1944, the U.S. national income was only $183 billion, yet $103 billion was spent on the war, which is 30 times the spending rate of World War I. The American taxpayer picked up 55% of the total Allied cost of the war. Federal debt went from $43 billion in 1940 to $257 billion in 1950, an increase of 598%. After the war, the world is divided into communist command economies versus monopoly capitalists on the other. Time for an arms race. Time to centralize the economic systems of the entire world. Central bank domination of national economies worldwide. Centralize regional economies such as NAFTA, European Monetary Union. Centralize the world economy. GATT, World Central Bank. Largest holder of gold is now IMF. Okay, what is the IMF? International Monetary Fund, I think. What happened to the gold? It's been stolen. At the end of World War II, Fort Knox contained over 700 million ounces of gold, 70% of all the gold in the world. We don't know how much remains. Despite federal law requires an annual physical audit of the gold, the Treasury has consistently refused to conduct one. Hasn't been conducted since 1953 when Eisenhower requested one. Where did the gold go? Over the years, it was sold off to European money changers at the $35 per ounce price. This was during a time when it was illegal for Americans to buy any of their own gold from Fort Knox. Nixon closed the gold window by repealing FDR's Gold Reserve Act of 1934, making it legal once again for Americans to buy gold, and prices soared. 9 years later, sold for $880 per ounce, 25 times what the gold in Fort Knox was sold for. Ian Fleming, the James Bond author, was the head of the British counterintelligence service MI5. Some say he wrote his fiction as a warning. There's an article in 1974 charging that the Rockefeller family was manipulating the Federal Reserve to sell off Fort Knox gold at bargain basement prices to anonymous European speculators. 3 days later, anonymous source for the story, Louise Auchincloss Boyer, mysteriously falls to her death from the window of her 10th floor apartment in New York. Wonderful. She was Nelson Rockefeller's longtime secretary. That's how she knew. For the next 14 years, Ed Durrell devotes himself to a quest for the truth regarding the Fort Knox gold, wants to know how much is really left and where the rest of it has gone. He never managed to accomplish getting a full audit of the gold at Fort Knox. When Ronald Reagan took office in 1981, his friends wanted him to return to the gold standard. He appointed a gold commission to report back to Congress. They reported that the U.S. Treasury owned no gold at all. All the gold that was left at Fort Knox was now owned by the Federal Reserve as collateral against the national debt. Never before has so much money been stolen from the hands of the general public and put into the hands of a small group of private investors. The money changers. International Monetary Fund in Washington, D.C. IMF. After World War I, the money changers pushed for world government under the guise of peacemaking to consolidate power even further. Their proposal for world government is World Central Bank to be called the Bank of International Settlements, World Judiciary to be called the World Court located in The Hague, the Netherlands, the World Executive and Legislature to be called the League of Nations. Carol Quigley, Tragedy and Hope. This is a quote from that book. The apex of the system was to be the Bank for International Settlements in Basel, Switzerland, a private bank owned and controlled by the world's central banks, which were themselves private corporations. Each central bank sought to dominate its government by its ability to control treasury loans, to manipulate foreign exchanges, to influence the level of economic activity in the country, and to influence cooperative politicians by subsequent economic rewards in the business world. 1994, dragged into some banker meeting thing. I'm confused. New York attended the meetings with the bankers, even though the U.S. rejected the League of Nations. I guess we joined something in 1994. I don't really know. Chase Bank, I guess we joined like the IMF or something. I'm sorry. Chase Bank assisted in funding the Bolshevik Revolution in Russia during World War I, just so you know. Chase Bank, controlled by Rockefeller family, merged with Warburg's Manhattan Bank to form the Chase Manhattan Bank. This merged with Chemical Bank of New York, making it the largest Wall Street bank. 1944, New Hampshire IMF and World Bank approved with full U.S. participation. Wait, 1944? I'm so confused. Second League of Nations, the United Nations, approved in 1945. That's still a thing, obviously. National Banking Act of 1864 created a banking cartel, gradually assumed the power to dictate credit policies to the banks of all the nations. The IMF has been given the authority to issue a world fiat money called SDRs, special drawing rights. 1968, Congress approves laws authorizing the Fed to accept SDRs as reserves in the U.S. and to issue Federal Reserve notes in exchange for SDRs. The IMF also has their own board of governors, headed by the leaders of the world central banks, or head of the national treasury departments dominated by their central banks. The fraud replicated on the national and international scale by the three arms of the world central bank: BIS, IMS, World Bank. Maximum loan ratio is set. Scramble to raise reserves to 8%. I don't know. Sorry. Mexico had a collapse at some point. Japan in 1988 had the lowest capital and reserve requirements and has experienced a financial crash that began almost immediately in 1989. The Bank of Japan lowered interest rates to 0.5%, but still the depression worsens. Radical transfer of power is taking place as nations become subservient to world's richest bankers. Africa too. Brazil, Latin America, all the third world. A war over third world. Oh my God. A war over third world debt. These banks are now up to 3 centuries old and deeply entrenched in the economic life of many nations. That sucks. Consolidating vast wealth into fewer and fewer hands. Even the people working at the banks have no idea what is really going on. Most of them, both communism and socialism, as well as monopoly capitalism, has been used by the money changers. Today, they profit from either side of the political spectrum, the big government welfare state versus neoconservative laissez-faire capitalists. Either way, the bankers win. Monetary reform is the most important political issue facing this nation. And here's my notes on the Lords of easy money. I guess I'm just going to keep reading my notes. I'm sorry. I don't know what else to do. I just wanted to cover all the stuff that I was learning about. And that's what, yeah. So I might have already, he talks about Thomas Honig, the guy who voted against Bernanke's insane increase of quantitative easing, aka money printing, money creation. So he was a constitutionalist and a conservative with a small c. Hold on, maybe I can pull up his little picture here. How do I open it? Just open it. Thomas Honig. He's a little bit of a hero, I guess, in a way, in his small way. He tried to dissent. So, talking about his day, going to work in 2010, when the Fed raises interest rates, it slows the economy. When the Fed lowers interest rates, it speeds up the economy. By 2010, the FOMC faced a terrible dilemma. Keeping interest rates pegged at 0 wasn't enough. The economy had revived but remained in terrible health. Unemployment was 9.6%, deep recession level almost. Copies notes. Yeah. Feel free. Committee began considering ways to break past the 0 bound in 2010. They were going to vote on taking interest rates negative for the first time. It's an experimental program named quantitative easing. It's weird because they're talking as if this is like new, but I thought that's what they've been doing forever. But it's like, I don't know. Maybe that's just what they call it when they do a huge, like such a huge much of it. I don't know. Honig was planning to vote against, and his dissent would be a lonely one. Talks about William Jennings Bryan, who was a populist. You shall not crucify mankind upon a cross of gold, talking about gold, but also about the monetary base and short-term interest rates. Honig knew QE, quantitative easing, would create historically huge amounts of money, delivered first to the banks on Wall Street. He believed it would widen the gap between the very rich and everybody else, benefit the small group of people who own assets, and encourage every entity on Wall Street to adopt riskier and riskier behavior. Cheap debt and heavy lending will create a bubble. November 2010 is when they did it, and the decade that followed was strange. Asset prices soared, stock market boomed, American middle class falls further behind. Ben Bernanke is the author of QE, and he wasn't going to change his mind. Janet Yellen was there, president of the San Francisco Federal Reserve at the time. Obviously, she's the Secretary of the Treasury now. Had also been chairwoman of the White House Council of White House Council of Economic Advisors in the late 90s. Richard Fisher, president of the Dallas Fed. That's the boss of the lady who wrote Fed Up. Charles Plosser, president of the... Richard Fisher would dissent a lot and give speeches, but he would still vote with Bernanke. So there's that. A lot of people, not a lot, but they would be like, this is stupid, but they would still vote for it. Charles Plosser was the president of the Philadelphia Fed. Charles Evans, president of the Chicago Fed. They prefer to have unanimous votes, so it doesn't look like there are disagreements. Honig versus Chairman Bernanke became adversarial. Bernanke painted him as disloyal, obstinate, and imbalanced. Hawks try to limit the Fed reach, and Doves argued for more aggressive intervention, the opposite of these terms when referring to war. Central banks cause inflation when they keep interest rates too low for too long, like in the 70s. Hawks hate inflation, and Doves are less afraid of it, and therefore like to print lots of money. Janet, often described as dovish, that's Yellen, because she supported low interest rates and more intervention. Honig and Fisher described as hawkish because they sought to raise interest rates and limit the Fed's involvement in markets. Okay. Doves are compassionate and hawks are harsh and severe because they don't want to intervene and help people. They would act like Honig was a Melanist. Andrew Mellon is a villain, heartless and delusional during the Great Depression. Let the fire burn. Let the people go broke. Moral cleansing. Liquidate everything. Bad advice given to Herbert Hoover. Honig but he's not. Honig isn't like him. But yeah. Honig warns about the bursting of an asset bubble. They like to blame the greedy Wall Street types when it happens, but it's the Fed that really created them. Yeah, I've noticed that. Oh, I'm so mad, Bernanke, when he was talking about who's on like 60 Minutes. He's like, I slammed the phone down more than a few times over the AIG thing. I'm like, yeah, but you still built them out, didn't you? And you caused it. So Honig warns about the bursting of an asset bubble. I remember that. QE had been used on a large scale just once before during the 2008 crash, but Bernanke thought it should be used regularly to maintain the economy. Yeah, it was supposed to be an emergency thing, and now it's just normal. Plosser, Fisher, and Richmond Federal Reserve President Jeffrey Lackert. Richmond Federal Reserve President Jeffrey Lackert also expressed concerns. Plosser, Fisher, and Lackert. November 3rd, 2010, FOMC meeting. Bill English gives long presentation about how QE might work and what effect it might have. Kevin Warsh was against it, but he still voted for it, but published an op-ed expressing his reservations. Still voted for it, though. Paul Volcker ends the great inflation of the 1970s by being a meanie. Author thinks central bank is inevitable, needed, and necessary. Okay, so that's weird. The author thinks that. But he probably just doesn't understand, like, semantics. Price of farmland fell 20% in the 80s. Demand pull theory. By increasing the money supply, the Fed stoked demand for debt and loans, which pulled inflation higher. Cheaper money meant more loans, more borrowing, and more demand for everything. In the 90s, the White House did price controls and stuff, not the Fed. Every time unemployment rose or economic growth slowed, the Fed cut rates and printed money. Meltzer. Who's Meltzer? I don't know. Fed was reacting to short-term pressures and pumping out new money that created long-term risks. Too many dollars chasing too few goods. In the 90s under Greenspan, what to do in a recovery while unemployment rises? It's an unusual set of problems. Gas prices are high, layoffs common, slips into a recession in 1990 that lasts 8 months. What happens next? Economy starts growing again, but jobs didn't come back, which broke the basic economic cycle since World War II. Debt-fueled growth of the 1980s and the bank failures that followed. Cheap debt produces fast growth for a while. It's a different kind of recession. Families aren't spending money because they're still paying off their debt from the 80s. It's a hangover. 1993, Ben Bernanke writes a paper on it called The Overhang. Things took a long time to get better. Jobless recovery. Greenspan perplexed toward the end of 1992. Economy isn't responding to their efforts. Economy broke with past patterns, so the Fed had to also. ordered the Fed to cut interest rates even though the economy was growing, which was the opposite of what the Fed should be doing according to the traditional models. 1991, cut from just over 5% to just under 4%. Cut rates steadily bringing down to 2.9% by the end of the year, kept around 3% until 1994. Honig voted yes while occasionally expressing concern about inflation. Greenspan uses Fed speak when speaking publicly, but talks normal in the FOMC meetings. Okay, so here's an excerpt from something. Okay, people who didn't trade bonds for a living still had a good reason to be interested in what the Fed was doing. The Fed's actions affected every aspect of economic life, albeit with long variable lags, and its policies could spell the difference between prosperity and calamity. But if any citizen was eager to find meaning in Alan Greenspan's statements, he made a fine art of frustrating their efforts. He intentionally spoke in a way that was not just inscrutable, but incomprehensible. This type of speech earned a nickname on Capitol Hill, Fed speak. It was a language so studded with jargon and with so many concepts nested within one another that a person needed an economics PhD or many years worth of experience trading on Wall Street to make sense of it. When Alan Greenspan started to talk, everybody's brains immediately downshifted into a low gear to do a heavy uphill climbing as they struggled to figure out what exactly he was saying. Greenspan's testimony that day, for example, included this statement. The fact that economic performance strengthened as inflation subsided should not have been surprising given that risk premiums and economic disincentives to invest in productive capital diminish as product prices become more stable. But the extent to which strong growth and high resource utilization have been joined with low inflation over an extended period is nevertheless extraordinary. Indeed, the broadest measures of price change indicate that the inflation rate moved down further in the first quarter of this year, even as the economy strengthened. So that's like how you would talk when you're publicly, trying to be like really murky and opaque. It says, this was typical. The curious thing about these statements is that they seemed more opaque and difficult to understand than the things that Greenspan said during FOMC meetings when he was surrounded by PhD economists. Back in 1991, for example, when Greenspan addressed the committee members at the end of Honig's first meeting, the chairman was direct and concise in talking about debt problems in the financial system. To be sure, he talked about complex financial systems, but even a layman reading his comments later could understand them. This all changed when Greenspan opened his mouth in public. A cloudy veil drew down over his words. Yeah, they don't want us to know what they're talking about. FDR, talking about FDR now. Glass-Steagall Act divided banking industry into two spheres. We know that banks speculate in the markets, commercial banking, people put their deposits in, creating asset bubbles. Okay. YouTube video of guy talking about the economy in the current time. Panasonic. Okay. The Fed is enjoying trying to blame COVID and lockdowns for everything right now, and the evidence doesn't show that COVID caused it. It began before the COVID case, before the first COVID. Yeah, okay, so they're trying to blame COVID and lockdowns and stuff for some of this financial stuff. It started before. They do that. They blame stuff. They'll blame whatever they can, really. As long as they can get away with just kicking the can down the road a little further before they have to answer. Tesla? What? Oh, crazy investor behavior. Oh, it's talking about the product. The higher you bid up the price of an asset, the lower the long-term return you get. Every day the market goes higher, you know the long-term return will be less than the day before. Super bubble. I don't know. 2004, back to the book. Honig's voting with FOMC all year, but notes that they raised interest rates too slowly. They had replaced the stock market bubble with the housing bubble. Yeah, it just seems like sweeping things under rugs and they pop up somewhere else. I don't fully understand it, but Greenspan retires, Bernanke takes over. Honig told Bernanke they should keep the rate at 5%. Honig was into rules-based approach, so neither really a hawk nor a dove. Two inflation problems, asset inflation and price inflation. Putting foam on the runway to protect the crash landing of the economy. 2008, a lot of money from the Fed went to foreign banks that were in danger of collapse at home. They engaged in QE for the first time. Emergency lending programs. Fed speak. Whatever. Fed speak for creating new dollars on Wall Street, though through the accounts of a small club of primary dealers at an unprecedented scale. TAF? I don't know. Between 1913 and 2008, the Fed printed more dollars every year at a steady, gradual pace. Okay, so that's between 1913 when it first formed and 2008 when we had the housing crash or whatever, the Great Recession. Printed more dollars every year at a steady, gradual pace, increasing the supply of new money, the monetary base. Between 1960 and 2007, however, the Fed increased the money base by $788 billion. So, during the 2008 bailouts, the Fed printed $875 billion, more than doubled the monetary base in a matter of months. When the Fed buys something, it takes it onto its balance sheet, showing how much money they've injected into the system. Affordable Care Act and Dodd-Frank Act. Tea Party movement pops up, helps Republicans take control of the House in 2010. Paul Tucker, senior official of the Bank of England, leaves the central bank and writes a Fed speak equivalent of a whistleblower account called An Elected Power. Huh. I didn't read that. 2004, keeping rates too low, feeding the housing bubble. Thomas Hoenig voting against Bernanke at every vote. Awkward. Shows there is debate and dissent at the Fed, and things being debated. Glenn Beck mentions the Weimar Republic inflation situation, hyperinflation in coverage at that time. Bernanke goes on 60 Minutes and totally lies, saying we're not printing money. The amount of currency in circulation is not changing. The money supply is not changing. And I think I just watched him on 60 Minutes also saying they literally were printing money. Like, was it what? Maybe it was a different one. I'm confused. In 2012, the richest 1% of Americans owned 25% of all assets. The bottom half of Americans owned only 6.5% of all assets. When the Fed stoked asset prices, it's benefiting a teeny group at the top. People who benefited from it talked about it the least. ZIRP, Z-I-R-P, zero interest rate policy. The broader benefits of ZIRP and QE didn't meet the promises of Bernanke. Yes, you are a failure. Sorry, Bernanke. Bernanke wants to intensify his efforts. Do it again. Do it more. Building support for his plan to escalate the Fed's intervention. Okay, so his solution was do more of it. 3 Fed governors didn't approve of ZIRP. Jerome H. Powell, he's the head of the Fed now. 2012 to 2014, quantitative quagmire. Powell used to work at the Carlyle Group and got rich before he went. Okay, interesting. New experimental tools Bernanke wants to use. Forward guidance. Fed keeps rates low, encouraging more lending and speculation. Operation Twist. Bond buying program. Similar to QE, except it doesn't pump in more cash, just encourages more lending by pushing down interest rates on long-term treasury bills. Fed buys the bills and sells the same value simultaneously. Same amount of short-term bills. Goal to dissuade investors from saving money in a 10-year treasury bill while not flooding the banking system with cash. More quantitative easing, says Bernanke. Betsy Duke recalls that Janet Yellen was the strongest advocate for unlimited quantitative easing. Central bank researchers who reported larger effects from QE tended to advance faster in their careers. Oh, cool. So if you so that's why that's not working. Probably because they reported to the very central bank leaders who were pushing for the programs. Dennis Lockhart, Atlanta Fed, questioning QE. Powell speaks out against QE, says might be creating a bubble in corporate bonds and leverage loans. LSAP, large-scale asset purchase. Same thing as QE. So just so you know, they like to change the names of things. There's something that they refer to as the taper tantrum when they were trying to slow down, I guess, and interest rates fall on treasury bills when the Fed buys them because the Fed is increasing demand for those bills. When demand is high, a borrower has to pay less interest, so rates fall. Fed announces they'll be buying less treasury bills. Sudden decline in stock market value. The plan to taper is abandoned. So that didn't last very long. Okay. Betsy Duke announces she's leaving the Fed. Collateralized debt obligation, CDO. Comparing Dylan Reed investment. Oh, wait a minute. You sent me that lady, Dylan Reed. Oh, shoot. Where is it? Is she working at Dylan Reed? Oh, yeah, Dylan Reed. I just spelled it wrong on my notes. Huh. Okay. Comparing Dylan Reed investment firm. Oh, Powell worked there with the Hanseatic League. What is that? I don't have time. Shit. Mercury Asset Management Group and SG Warburg Group turn out to be subsidiaries of the same investment firm because there are limits on how many treasury bonds you can buy. So this is like the dark banking system. You know, it's kind of like how they call like the shadow government. It's like the shadow banking system. Mosier not fired. Solomon covers up his behavior. Definitely illegal. May 1991, Solomon Brothers used the scam to buy so many treasury bills that it controlled 94% of the supply. The Treasury Department accepted their explanation that nothing was amiss. Nicholas Brady, Steve Bell came up with reconciliation used to pass Obamacare. Solomon is bid rigging. Warren Buffett came along and did something. I don't know. Sounds like Powell is protecting them, and he's invited to be a partner at the Carlyle Group. It's an equity firm. David Rubenstein specializes in buying and selling businesses. So they're not creating anything of value. They're not providing service. This is like moving money around kind of stuff. Relied on government spending and hired former government officials to help James A. Baker and Craig Carlucci, George H.W. Bush, an advisor to the firm. He got rich there. So Jerome Powell got rich at Carlyle. And then it talks a lot about something called a Rexnord deal. I don't know. Era of ZERP, continuing their search for yield. Economy remains too fragile to absorb a major shock. Banks are still too big to fail. Fed had reshaped the financial markets. Honig, you had 7 years of basically zero interest rates. New equilibrium developed around a zero rate, globally even. Reversing the ZERP, they called it normalization and said it would be completed by 2015. Stein nominates Janet Yellen to take over. Yellen is in charge now. First woman, only served 4 years. Deflation is also a problem. I hear she was kind of an asshole. So he talks about COVID, talks about Robinhood, Citadel. Bernanke did work for Citadel, claimed it was only a few days a year. In the summer of 2020, talks about the Main Street program, which failed, trying to help small businesses to prove that the Fed doesn't only help the rich, middle class falling behind, taking out cheap loans just to remain in place. So that's us. That's what's happening to us in all this. Consumer debt hits 14 trillion in 2019 after adjusting for inflation. Oh, and we're not having kids either because we feel like we can't afford it, which is, possibly kind of true, I guess. I'm not saying don't do it, but I'm just saying this is what they're doing to us. Using their income to service debt. DoorDash stock explodes. Corporate debt. Zombie company is a company that carries so much debt its profits won't cover loan costs, so they roll their debt perpetually. Oh, that sounds stupid. That sounds wonderful. No, it sounds stupid. Steve Mnuchin. He bought a bank with Soros and some other guy in California. Mnuchin. He was Treasury Secretary before Yellen. Good to know he's hanging out with Soros. And it's nice. The stock market more than doubled in value in the 2010s. Slow crash. Booming asset values that primarily benefit the rich. A crash in the spring of 2020 that most people didn't know about. Most people didn't know about a crash in the spring of 2020, so they hide it from us. Guy said stupid things about January. Oh, yeah, the author said stupid things about January 6th. That's probably how he got his book published. And the book is over. Fed up! So this is her book. It was written in 2017. She talks about Brooks Lee Bourne, Dick Fold, Harvey Rosenblum. She talks about entering the Dallas Federal Reserve. It's a myth that the Fed is nonprofit. They make billions in profits per year through various financial functions. After expenses, most profits go to the Treasury, escalating profits in recent years. All those bonds pay interest. In 2017, 97.7 billion record earnings. Self-financing entity that deducts expenses from its revenues. The cost of operating the Federal Reserve System are borne by the U.S. taxpayers. Well, of course. Plant in Fort Worth and District of Columbia manufacture a lot of money. Truckloads of greenbacks. The districts kind of remind me of Hunger Games, I say here. That's great. That's great, Heidi. Dollars made of 75% cotton, 25% linen. Who cares? $1 lasts an average of 5.8 years in circulation. $10 bill has the shortest lifespan, only lasts about 4.5 years. $100 bill lasts 15 years unless tucked away. Coins can last decades. $2 bills never really caught on. Okay, that's great. The Phillips curve, Okun's law, the Taylor rule. She talks about elitism at the Dallas Fed. Condescending. They think they are economy geniuses. Now she's doing a deep dive on Richard Fisher. He likes Texas and stuff. Ignoring the price of food and fuel in their inflation calculation, which is stupid. Rosenblum and Richard Fisher pointed it out, invited Bernanke to listen to their presentation, and he demeaned him in front of the board. What do you mean, who did? Bernanke opposes simplicity and thinks he has a monopoly on truth, thinks he's the alpha intellectual, less charisma. Neo-Keynesian economics, saltwater economics, coastal feds, freshwater economics, Midwest, more free market. She says the Fed fuels the formation of bubbles. And I wrote, okay, we get it. I still don't understand it though, damn it. Talks about Bear Stearns. Her boss is Richard Fisher, sounds like, and she seems like him. Alan David Schwartz was the American businessman, executive chairman of Guggenheim Partners, an investment banking firm based in Chicago, New York. He was previously the last president and chief executive officer of Bear Stearns. Okay, Soma, system open market account. I don't care. This is so boring. I need to stop. I don't know what to say. Shadow banking system. Talking about AIG. Paulson wrote a memoir. He claims he was sick and throwing up and couldn't sleep. Yeah, whatever. Oh, Zoltan Poznar. Shit. Okay, she calls it a controlled demolition of the markets. Okay, I'm going to stop. Whatever. I just thought that was a good way to put it. $27 trillion market in a black box. Oh, so Brooksley Brown had a dinner with Greenspan, Alan Greenspan, where he told her that he didn't think that fraud should even be against the law. I think that's pretty amazing. Of course he doesn't. It's transitory, funny story. Inflation just sustains the vicious vibe. Okay, I don't know how to end this. I'm sorry. The end. I'll do something else. I'll do like a terrorist attack or something interesting. What did I do last time? Pythagoras? I'm being really boring now. Too boring. Way too boring. I'm sorry. I was just trying to figure out a way to convince people that this is bad and we don't need them. I don't really know how to do it though. I think that there's something probably weird coming up. If you look at like financial news, it seems like, I don't know. I trust that autist guy. He seems like pretty honest, you know. In the movie, he says like, I don't work people. And yeah, I don't feel like he's a liar. They're just using us somehow. I don't know. Everything's losing value. And it just sucks because we're like impotent to like stop it. And nobody cares what we say or think. And we're just like stuck like rats in a maze, dropped in. We're supposed to like just cope. First time watching, great perspectives. Look forward to more vids. I work with my hands, so can't always comment actively, but thanks for the stream. Well, thank you. I feel, I don't know. I've got to get something better going here. Cause like, I'm just like cramming and like trying to learn stuff. And then I just read my notes. I don't know. It's like kind of weird. And I like to play videos, but if I play too many like everything gets, like copyrighted. I'm like paranoid if I play any amount of any video. God, I've been going for over 2 hours. Shit. I don't know. This guy's good. Skip ad.
Now,
I like this guy for explaining stuff. He looks kind of like a hippie, like a Ted Kaczynski type.
In March 2020,
Thank
as
you,
the
Shane.
pandemic threatened to undo the entire economy,
I
the
feel like I
Federal
need to
Reserve,
do
as you
that.
see here in this graph of
I need
its
to figure
balance-
out a way to like put it into like a, I don't know. I can't just like, my notes will be like on this book or that book, but they'll cover a lot of the same issues. So I'm like repeating a lot of things. But I was repeating a lot of things in my head too, just trying to understand what the hell they're doing. But I think I just, it's so tempting to just be like, okay, I don't have to understand this. Can we just make them stop? Can we end the Fed? You know, like Ron Paul. I mean, who's going to take up that mantle since he's old? Can someone else do it? Is there anyone else? Like, I wouldn't want to even like entertain any politicians if they're not saying that at all. Like, isn't that a power we could have to be like, oh, what's your take on the Federal Reserve and like the banking system? Because we're like funding the people who are. Oh, I pulled up a couple things because I was like, I wanted to find. There is insider trading shit that is going on. Or is it? I swear. Is this it? No. I swear there was like insider trading. I mean, there's no way they're not using it for that. They're definitely benefiting. Intercept. There's a few different situations I was able to look up. Federal Reserve Bank of Richmond. Oh yeah, so Jeffrey Lacker, I think he ended up having to resign. Yeah, he resigned his position. We were just mentioning him. After acknowledging his role in a leak of non-public information. So there's that. And then Robert Kaplan, I think, also had to resign. Maybe you could make one of those schizo thread maps in your room. Yeah, I heard there's an app I could use to try to like organize old Polydent Pelosi. Oh yeah, she loves doing that. It just sucks. I don't know. It's so hot. I've been poor my entire fucking life. I was like maybe lower middle class right at the beginning, but as soon as my parents divorced, my quality of life plummeted. But enough about me. I don't know. I've just been poor. I'm tired of it. I'm also used to it, I guess. But it's been slowly getting worse. Like I've been slowly getting a little better at managing my life. So like things have improved, but incrementally, I think they're sucking the wealth out of us and our potential, like our ability to like, you know, like the millennials not being able to buy houses and all that stuff. I think it's called Mind Map. Ooh, maybe that's what I need. Oh, there's an activist group called Fed Up. I don't know. Okay, well that link doesn't work.
She massively increased its assets, launched an unprecedented program of
2015.
quantitative easing. The Fed's balance sheet exploded.
2015 to 2020?
Here it is zoomed in. Look at that. Up by more than doubled. And these asset purchases continued deep into 2021. And as late as last fall, the Fed was still purchasing $120 billion worth of assets every month. $120 billion worth of assets every single month.
It's like they're just trying to avoid
and
it ever coming crashing down. But
this is the Federal Reserve's balance sheet as a percentage of GDP. Look at that huge jump in March of 2020, went from under 20% of GDP, the size of the Federal Reserve's balance sheet, to over 35%. So massive changes and drastic
I just
measures
feel like
taken by the
they're
Federal Reserve
robbing us, and they're going to leave us like.
The yield on the 10-year Treasury, on U.S. Treasuries in general,
they'll be like off in their
was very low in large
elsewhere.
part and dropped in large part because the Fed became such a major buyer of bonds on the market. When demand for bonds is high, the yield is low. In other words, government can borrow money very cheaply when the yield is low. As many different people, dealers, institutions, Federal Reserve are competing with one another to buy government debt. This allows government to borrow money at a low interest rate, which in turn encourages governments.
I don't know. I'll just keep trying to learn about it, I guess.
Major budget deficits.
I guess I can't expect to become a
If you look at
genius
the
over the course of 3 weeks.
10-year yield between November 2019 and August 2020.
I'm kind of bad at
it went down
managing money in general.
by 73%.
They didn't really teach us this, you know?
Because in large part because of the Fed's involvement
I've gotten better,
in the bond market. And there were some other variables at play
I
there
have credit card debt.
too. But
Trying to pay it off. But then I use it and I'm like,
made a
no,
major
don't
difference.
use it. You have to pay it off.
Now, unlike the quantitative
have no
easing that
debt.
occurred under Ben Bernanke in the years after 2008, from 2008 to 2014, much of the currency that the Fed created out of thin air to expand its balance sheet, to purchase all those treasuries and mortgage-backed securities, much of that currency has entered the real economy. That wasn't necessarily the case after 2008, but it's the case now. And so the money supply as measured by M2 has increased by more than 42% since the pandemic. This is the number
If
one
this hippie
contributor
can understand
to
it, I can
inflation.
understand it. Okay, anyway, I'm going to stop. You all have a good night. I'm going to go play Fallout 76 where the money is cap bottles. Actually, they have gold bullion now, but yeah. I used to like actually talk to people with the headset, but now I just listen to like videos like this while I play the game and I don't talk to any of the other players. I'm all asocial now. But yeah, the money is just paper. When you find money, you know, in the game, it's just paper. You just go, it's just paper. Okay, anyway, thank you. Good times. I don't know. Maybe I'll do 7-7 next time, or maybe I'll do a historical character. I don't know. Something. I don't know. It's hard to choose. Okay. Thank you. Thank you for joining me, and I appreciate you.